ahead and get us started by way of just going ahead and starting with this statement here first, and then we'll turn the time over to Mr. Northington. This demonstration today is designed to instruct you on using MetaStock software and accompanying plugins. It's not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Okay. Well, let's introduce to you our guest here today about Kirk Northington. Kirk is the owner of Northington Trading, LLC, and creator of MetaSwing, as I mentioned, a very popular plugin with MetaStock. He trades his own accounts using this system. We're going to turn the time over to him right now. Kirk, go ahead.
And thank you for the intro, Verl. Appreciate that. So let's get started. We've already looked at a disclaimer. This is me, and as Verl said, I'm the founder and of Northington Trading. I'm the creator of MetaSwing. I'm also the author of a book published by Wiley, Volatility-Based Technical Analysis, because virtually everything I do uses volatility math as its engine under the surface. This is a partner in my business, Carson Dahlberg. He's also a chartered market technician, as am I. Carson has a deep set of experience and is on the board of directors of the Market Technicians Association. MetaSwing, what we're going to show today, has been reviewed twice in Stocks and Commodities magazine. This was the most recent in April of 2011, and this was when we introduced version 4. What we're going to talk about today are the capabilities of MetaSwing. MetaSwing gives you quantitatively derived directional signals on the screen. It gives you support and resistance, which is extremely, let's call it, innovative. It's never been done the way that we do support and resistance because it's based on volatility. We do momentum in the version of overbought and oversold. Part of what we introduced for version 4 was updated trend indication and some short-term mechanical trading systems. So if time is willing, we'll show you all of that. Our mantra here and in our software is that money is made at the extremes, and that's what we try to identify, the extremes. You'll see a little bit more of what I'm talking about as we get into it. We're going to begin with our support and resistance tools. Everyone knows classic technical analysis, support and resistance. Here we have straight line analysis, okay? Support coming in here. Again, resistance over to the right. Pretty simple, right? Another form of line study is a trend line or trend line support in all of its forms. And then to the right here, a moving average, for instance. Often that's looked at as support or resistance. Well, this is classic stuff. Well, MetaSwing, and especially our support and resistance tools, it's just, as we say around the office here, this is not your grandfather's technical analysis. This is new and different because we live in a non-linear world. Okay, it's very adaptive. It works in any time frame. It's non-linear. It's immediate and predictive into the future, and statistically proven. We're a quantitative shop just as much as we are a technical analysis shop. Okay. Now I'm going to break from the presentation, and in the past I've always presented this on slides. I am now going to do my best to change this over and show you MetaStock. Okay, so here we're looking at a daily chart of Agilent. Okay, it's the first one in the S&P 500. Nothing magical about it. With support and resistance, here's how we do it. We calculate it based on historical volatility. Here, up here at the top, is an N-band. This is called an N-band, and it's a proprietary tool in MetaSwing. Okay. At the bottom is a lower end band. So this is the upper and the lower end band. These bands were created to be real-time, immediate support and resistance. Bottom is support, top is resistance. It's meant to be a point where price will not cross, okay? And if it does, there should be an immediate tradable reaction most of the time, all right? The support and resistance qualities begin at about one average true range away from each line. So here we go. I've just plotted the ATR zone lines inside of that. And I'm going to go ahead and just color these. Let's go with that. So the resistance qualities of MetaSwing start just inside of those bands. Okay, now let's take a look at it. And as you can see, price advances right up to the resistance zone and then typically starts to reverse. Getting one question says that how do these bands differ from regular ATR bands? Well, it's hard for me to say exactly because it's proprietary, but I'll tell you the underlying math under these end bands here is unlike anything that exists in the public domain for technical analysis. They're not calculated anything like Bollinger Bands or any other volatility bands that you've seen. Now this distance right here in the center is strictly one average true range over the previous 40 periods. And it provides for noise in the marketplace. Okay. It also tells you that price moves into it. That's kind of a signal that trend may be moving in that direction as well. Okay. So these are end bands, and that's part of our support and resistance. They're designed to be immediate support and resistance. Okay. Now I'm going to switch to another chart and take this a step forward. Let's go to the next stock in the S&P 500, Alcoa. All right. These are projected support and resistance lines here. Okay. And they are formed from the peaks and the troughs of end bands, as you can see here. The top peak and the top end band trough. Okay. A significant low and a significant high. When that is formed, these lines are drawn going forward, and they then present support or resistance going forward. Okay, and I'm not trying to pad things with the perfect anecdotal chart here. I'm just starting at the top of the S&P 500. Let me show you just briefly how this is important. As you can see, price comes here and sees the end band as a support. You get a tradable reaction for about 3 sessions. Trend is down. Okay? When trend is down, this initial reaction is going to persist for about 2 to 3 periods, like it does right here. Okay? If you're using any of these conditions in the direction of the trend, then the statistical significance is that the signal or the condition will persist for 3 to 8 periods. That makes it fractal. You can be looking at a 15-minute chart, a 1-day chart, synthetic time frame 3-day chart. So we're just looking at periods, i.e., in this case, candles. Okay. Now, price then continues down and sees support at this lower SR line. For simplicity, by the way, we number these lines 1 through 8 going down. So 1, 2, 3, 4, 5, 6, 7, and 8. Each of these lines is a pair, as you can see. There are 4 pairs corresponding to the peaks and troughs of the end bands. This pair forms a resistance or support zone. Okay? So if you can imagine that this zone right here, beginning at the beginning of 2012, is a resistance zone. As price rises into it, it sees resistance and significant amount of pause. Okay? Quite often, what happens is price coalesces along that resistance zone. Okay? As you can see right here. Over here, back to our example in late October, price comes down, sees support at this lower zone, and then rises back up to this zone right here between the 5 and the 6 line. Very common price action, okay? Very common, all right? Now, that's the basics of our support and resistance. In this case, I'll just switch forward. Everyone loves to look at Apple. And as you can see, this is just a daily chart of Apple. Price goes along and sees support, resistance, support here, comes up, looks at support and trades through it, and that tells us that we probably have some trend change in store. Okay, comes up to the next set of resistance lines, coalesces along it before it can break out higher. We're going to get into what this tells us shortly when we get into trend direction. Okay. Now, trend continues on up, comes down, and finds support here. Okay. Stops, waits for its usual jump after an earnings or whatever happened on that day. I want to say that was an earnings announcement. Comes down and finds support there. And based on what's happening today and yesterday, we'll talk about that in our trend discussion in a second. This is basic support resistance using MetaSwing. This is very different. I don't know of anyone else that does volatility-based support and resistance. Okay. I'm going to look back really quick now and see if I can take a couple of questions. Richard says, so it's support until it's no longer support and resistance until it's no longer resistance. That's a good point. Yeah, that's pretty much how support and resistance works. Resistance works until it is violated, as they say. Okay. The important thing is that it is support for typically a certain quantity of periods. Okay. So let's say this instance right here in October. Let's say I am a day trader. Well, this tells me that I've got probable support in this zone here in early October. If I'm a day trader, I look at the daily, and that then I can drop down to a lower time frame chart, or like a hourly or 15-minute or whatever charts I'm normally looking at. And I know that I've got this support zone below me, so that helps me with my risk reward and where I can begin to take longs intraday. Okay, so that's one application of it. All right, same thing here. I know I'm descending down, and I've got a support zone beneath me. Now, nothing in technical analysis works all the time. Okay, and that's just a reality of life. If it did, then there would be no opportunities for us in the markets because it would be a done deal. That's basically how this works. These lines have been quantitatively tested, and I could literally bore you and put you to sleep here by showing you about 10 pages of statistical analysis tests. We're not going to do that in this hour because it would water down the hour and we have too much to cover. But feel free to send me an email at kirk@metaswing.com, and I will send you all the statistical performance reports you can read. And especially if you're suffering from sleep problems, we can definitely help you with that too, because this stuff will put you to sleep. So this is our support and resistance tools. Now, additional use of this is to aid in trend direction. Okay, I'm going to switch to another chart. Here's another view of Apple using the entire MetaSwing suite. As you can see, what's on this chart is our support and resistance tools that we were looking at earlier, as I highlight them here. Okay, our N bands. Right now, I don't have the ATR lines on there right now. Okay, what I've also got here in the center is a trend tool. This is a primary trend tool for direction and strength, but we don't use it all by itself, and I'll show you just in a minute. The trend remit is fairly obvious. Direction for the intermediate level trend is in the center. Here is bearish, neutral is white, green is bullish. The set of hash marks that you see beneath it are strength. So here is strongly bearish, neutral would be no color, and then green would be strongly bullish. Okay, so when we get a stronger trend in one direction, that's when the hash marks begin to come through down the bottom. Okay. essentially the use for this is, well, let me back up. This trend tool is derived mostly from volatility compensated momentum measurement of different forms. Okay, so we're coming at a trend direction based on some adjusted momentum measurement as a technician. Now I'm going to show you how to confirm or look at trend another way. So just now we were looking at our support and resistance tools up top. Okay, if you will, at the top, focus on the trough of the upper end band and the peak of the lower end band. At this trough of the upper end band, once price crosses above it, as it does right here, and maybe I can make this a little bit bigger, okay, price begins to cross and trade above that line that is associated with that low point in that end band, then that tells us we have the probability of a trend change in place. I get 2 or 3 closes above that, and as an objective rule, I know that we have a probable trend change in action. Now, nothing ever happens, all the time, but this is a probable case. This is using support and resistance as a trend tool, and the lower is using momentum as a trend indication. So I use them to confirm each other. By this point, we're starting to get some signals of strength start to add up down here, and so it's probably a safer bet that we have an uptrend breaking out in Apple. Okay, and well, that's what occurs. Interestingly enough, right now, what we have setting up, I would give it another day or so, but today's price of Apple is below this peak in the lower end band, or what we also like to term, this is our number 6 line. There's 1, 2, 3, 4, 5, and 6. Now we're beginning to get a close on that line, a close yesterday beneath that line, and then today, as last I looked, price is beneath that line. Also, we're beginning to get bearish trend indication. So it would appear that some bearish trend, short-term to intermediate-term trend, may be setting up in Apple. Okay, and as a target, what I would say is the 510, this 520 to 505 range. That's very typical as a target when the trend begins to break down like this. Okay, from a short-term target perspective. Okay, and that's a trend tool. Now I can just click forward and look at the next stock in the S&P 500. What we have is basically a pretty well-defined trading range for AmerisourceBergen. And for trend followers, this is difficult because all this chop really hurts. It's difficult, Here you have a trend indicator, and it's starting to indicate possibly a trend is breaking out. But, I've only got one close above this upper SR line, so I'm going to look for a little bit more. Okay, so these sorts of chops and breakouts above previous highs, such as this right here, you've got a series of previous highs. I don't trade that way. I don't use previous highs and lows as resistance or signals. I don't see that as a breakout above resistance right here in October. Okay, what I see as a breakout is if it begins to trade above this trough up here. It's a more objective and a more statistically valid way of looking at the trend. Okay, let's see. Okay, again, as we follow this across, we get a bunch of chop, but where is it telling us that we have trend? So we were saved from a trend breakout here, a false breakout. Here we have one that's beginning, and it really tries, but the market negativity probably took it down in mid to late February. Okay, but we do not get a trend breakout there. And here again, we don't really, if we look at both of our criteria, we can say we don't have a downtrend. So we don't have a defined trend in here. We may be beginning to see something here, but I would want to see a little bit more. I could buy into a negative trend case right here. I really could, even though we've had these upper closings right in here. This may be a good place to play a short-term trend to the downside, because I've had 3 closings, no, take that back, 4 beneath this support resistance line, and I've got a negative trend indication. So this may be a good spot to enter a downtrend. Of course, you're all, I'm sure, taking notes, and I'll know within a couple of weeks whether or not I have egg on my face, but that's what we face in the markets. We can't be afraid of the right edge of the chart. Okay. Okay. Let's see. I'm seeing a series of questions, but honestly, I think most of them are about things that we haven't gotten to yet, so I won't attempt to answer those yet. So as you can see, what we've covered so far is immediate support and resistance in terms of the end bands. Okay, and here, upper and lower. And then projected support and resistance going forward. Okay, through the SR lines here. And then we've covered trend with our trend indicator, the bullish and bearish trend indication, trying to project trend going forward in the intermediate. Okay, and we try to confirm that trend when trend breaks out below a peak in the end band of the lower end band, or above a peak in the upper end band. Okay, let's just move on to another chart here, and you know, we can see that happening in a very long, slow, gradual trend here with Abbott Labs, price above, and begins to trade above. I'll turn off these crossheads. This level in last August, we began to see price trading above that level in here, and trend indication. Still though, finding support once resistance has been violated becomes support, finding support there, and some chop. But then when I see these lines start to switch higher here, here, as well as here, I start to get a little enthused about the trend direction. Also, I'm seeing positive momentum down here. It's not a great trend, but it does continue to the upside. Okay, so that's trend. Now let's take a look at other things that MetaSwing does. I'm going to go ahead and switch to a different asset class. Here is an hourly chart of the Euro USD. And let's spread this out a little bit there. Okay. What else does MetaSwing do? Okay, it gives you volatility adjusted momentum indication. I'm going to turn my crosshairs on for this. Down at the bottom of the screen, you see 2 pairs of squiggly lines, and this is a very different type of oscillator. Okay, it's meant to make it easier and more objective. You know how when you'll get a stochastic or an RSI and price breaks down on a downtrend, and you're going to get an oversold reading that can persist for quite some time. Okay, well, this tries to take a lot of that out, and so I'm going to do some alignment here. This red line here is 0, as you can see over here. The oscillator is unbounded to the top side. When the blue line, the oversold line, comes down below 0, it means we have roughly an oversold condition. When the red dotted line comes down below 0, it means we have an overbought condition. So what I'm going to do now is I'm going to start to line up my crosshairs here and say we have a relatively overbought condition at this point. Price does rise into that level and trade to the side. Here we have a relatively oversold condition. Price changes direction. Okay, trades down and then changes direction and trades to the right. By the way, a change in direction is not necessarily a reversal. It's either a reversal or trading to the side. Here we have an overbought condition. Price rises into it and then reverses. Here we have an oversold condition. Price falls to it, trades to the side. Similar here. Here we have an overbought. Price rises, trades down, etc., etc. Okay. Nothing works all the time again, but you'll find that this is a more objective way of looking at oversold. okay? It generally is not going to remain in an oversold or an overbought state for prolonged periods of time. It uses volatility math underneath to be very, very adaptive to momentum and market noise, okay? The other part about it is that you can use the recent highs of the opposing indicator to know if you've got an extreme oversold. For instance, in this case, we've got oversold because we have an oversold line below zero, but also the above line, the opposing line, is higher than it has been for quite some time. That means we've got a more extreme overbought condition. And sure enough, we get a nice reversal off of that, rejoining the trend. This is a great tool to use for trend following, okay? And it's also another piece of information that you can put in your quiver for trend reversals, okay? But that's a little bit more complicated, as trend reversals always are, okay? But trend following is the primary method for people using technical trading to make money in the markets, okay? I have clients who are also using this tool to do counter trend trading. You know, in this case, I would tend to use the bottom support here and an oversold condition to say that I'm going to get a probable counter trend move. If we want to expand this a bit, let me go ahead and use the zoom tool. What I'm really referring to is this area right here where we get an oversold condition. Price trades down to the bottom of this support range, okay? And it's very typical for that to be a setup for it to trade back to the center or higher of that range, okay? But I'm also combining that with a lower oversold condition, okay? So that's another asset class. It works on any, MetaSwing works well on any efficiently traded market. So, you know, you just need some good efficiently traded market, some liquidity, okay? Question from John Dory. Do your calculations make any use of implied volatility, or do you rely exclusively on historical volatility? It's a good question, John. The answer to that is it's all historical volatility, okay? It is strictly the typical time series loaded into the technical chart. Open, high, low, and close, okay? We don't access or use any implied volatility, okay? Super. Okay, so let's go forward. Let's see, I think I've got another asset class open. So that's currencies. Well, while we're here, just for the heck of it, we could switch to I don't know, try a 15-minute, okay? I like 15 minutes. Fairly universal. And so we have trend taking us down. I'm not making any adjustments to the trend tool that's needed to adjust it for lower time frames. That's why you're not seeing any green or red here. But just for time purposes, I'm not going to do that right now. Price descends, and you can see it begins to see support here, and tests it long enough such that it breaks through, finds support at end band, and trades to the side. Okay, but that doesn't mean that trend is over with. We get a nice little fake out here, and again, when I see price above it and then come back below it, below this range, that's some real trend weakness right there. So I'm going to take my little loss if I entered up here. I'm going to take my little loss and just exit below this line right here. That's another thing that MetaSwing does for you. The support and resistance tools give you great exit points. Okay, if I'm a trend follower and I want to leg in and out of positions as a trend is ongoing, okay, I'm going to leg into positions in the trend, and as I get to real support, a high probability support area such as this end band being touched and crossed, that's where I take part of my position off, or all of it, and wait to enter the trend again. I can show you example after example after example of that. My partner and I run a trading service called A-Game Trading, and our subscribers see this all the time. we leg in and leg out of positions, mostly leg out as we take profits at resistance points an awful lot. So here we have trend continuing on down, and you can see the validity of the support range here as price breaks down into this lower area. Okay, let's see. There you go, and well, we could talk all day long, but nonetheless, there you go. That's just another time frame of US dollar, euro. We can even switch to a daily time frame. And you can see that these support resistance areas work just as well, and trend following as well. We've got a request to look at another asset class, crude oil. Actually, appreciate it, Nashmul. I didn't pay him to ask for that. I already had one loaded up here, so here we are. This is crude oil, a daily. It's fairly current. Let's skip to the good stuff at the end of the chart. Okay. From a trend setup standpoint, we continue to have a bullish trend take place, but we begin to get bearish trend indications here. Okay. We have an overbought indication down at the bottom. But you know, I don't have price trading below this SR6 level, which would be the peak in this right here. Now that gives me a decision. You know, I've got a directional signal here, which I'll explain shortly. You know, it's a very overbought condition. Do I maybe want to put a little bit of a position on and see if something that's a simple swing high reversal sort of thing turns into a negative trend? Well, I might want to do that, okay, depending on my style of trading. So you can see here we begin to get closes below this SR6 line right here, this lower blue line, and now we're a good bit into it, but after 2 or 3 days, I've got the probability of a trend setting up, trading to the downside. What's oil going to do? Well, I can tell you an awful lot of people here in the continental U.S. and probably across the rest of the world wish it would trade way down. In the short run, you can look at a short run target for oil, this particular security. We're not looking at any particular one. We're looking at light sweet crude of this support range right here, which is rather wide, from 85 to about 94. Okay, you're going to see some level of support here. Okay, and it's going to be interesting going forward in the days going forward. Okay, just like we kind of saw here, we saw support in this range once it began to set up. Also here, price slid down the end band and found support here. So this would be a great place to take part or all of a short position. If you're short crude right now, this would be a great place to look at delevering. Okay, and this is crude. What we can do is take a look back at some history here. Okay, and you know, we get conditions like this: oversold, directional signal, support, bullish trend, not necessarily with strength, but you know, we have another thing that tells us we have a bullish trend in place. So we get a short-term reversal. You don't get trend blasting off for the moon or anything, but we do get a short-term swing. Okay, that's how we trade swings with MetaSwing. Okay, so again, so far we have support resistance, we have trend indication coming at you in two forms, with this momentum-based trend sensing down here, and trend confirmation by breaking through support or breaking above resistance, as it did right here. Okay, and so the two kind of confirm each other, and then we have momentum indication with momentum low, such as right here. We began to get low after this candle right here, and what I'm looking for is, you know, 3 or 4 candles where I get some sort of tradable reaction out of this oversold condition combined with extreme support. it's kind of volatile, but I do get some reaction here. So if I'm a day trader, I'm looking at 15-minute or hourly charts in addition to this, but I know I've got a statistical probability that price is probably not going to continue much further than this right in here below this end band. And that's kind of the way it sets up. So I hope that gives you a good understanding of using multi-time frames with MetaSwing. Now we're going to focus lastly on these directional signals that you see on the chart. I'm going to take these crosshairs off just not to confuse things. And again, right now we're looking at crude. It doesn't matter whether we're looking at charts, indexes, currencies, any chartable, efficiently traded asset class can be used. Okay? You know why? Because they all use volatility as a decision in their trading. The reason why that's significant is that there's so much options and futures contracts related to all of these securities nowadays, and the principal input in the pricing models is volatility. So that if you can identify volatility extremes, then you're using good technical analysis that is shared by the majority of the quantitative community that is driving price in all these asset classes. We all think we're trading against other people. We're not. Primarily, you and I, as individual traders, we're trading against computers. But more so, we're trading against the people that programmed all that algorithmic trading. Okay? The brightest and best minds from, you name the university, MIT, Harvard, Stanford, tremendous institutes of technology overseas. These folks are paid enormous amounts of money in Wall Street firms to quantitatively derive trading algorithms. You are competing with the brightest and the best in the world, and I can tell you, volatility math makes up, if not the majority, then certainly a higher quantity of the math that they're using when they design their algorithms. So keep all that in mind. Here, I'm going to show you what you're looking at on the screen in the form of directional signals. I'm going to keep it relatively simple. These little blue arrows, those are called Adeo signals. Adeo is Latin for to a point, how far, but it means some boundary level. Now, I know there's somebody out there that speaks Latin. I do not. I looked this up. It was what I was looking for, so that's what I named it. So, supposedly, according to Google Translate, that's what it means. So it's named Adeo. Adeo means that price has gone too far in one direction and needs to change directions, and likely will. Okay? Again, I'll state that. An Adeo means price has traveled too far, too soon in one direction, and likely will change directions. And by a change in direction, what I mean is that it will stop going in the direction that it was trading before. The example I have highlighted here in March with this blue Adeo, that's exactly what happened. In this case, it was a reversal, but that's not what happens all the time. Over here, we have Adeo signals for 2 days, and it changes direction, trades to the side. The important thing is, if you entered thinking you were going to get a trend continuation with a reversal up, look at this. You had adequate time to decide that you were wrong, to exit your position without a large loss. Okay? That doesn't always work that way. Okay? I don't try to put up perfect charts with perfect setups for everybody just to make the product look good. Here, it did not work that way. Okay? Around August 2011, we had a price breakdown, and I mean, it just went right through that. But that's another reason why we don't use simple directional signals alone. As technical traders, we need to use intelligence derived from different forms of decision making. In this case, support and resistance, overbought, oversold, trend directionality, etc. Here, I don't have a defined uptrend. As we can see down here, I've got support hit, but you don't know if it's going to hold, so you can take your position you know, heck, I might have taken a position long here, okay? But it quickly blew through that. After a couple of days, I know I'm wrong, at least by this point around 85. I know I'm wrong, okay? And I can get out. That's just the way it works. We typically seek to provide methods that give you a 60 to 65% chance of win-loss, win versus loss, okay? That's typically what we're shooting for. But look at it another way. If your signals are statistically valid and tested properly, then they work for you not only when they work, but also when they fail. A failed signal should tell you something. It should tell you that typically trend is changing. In this case, that's another piece of information for me that I've got a complete failure of these Adeos, and that statistically shouldn't happen, but it did. I come down, support is hit, trades back up into what is now resistance. Now I'm much more convinced that I'm in a downtrend, and this makes for a very good trend entry point right around resistance, okay? And we get some trend to the side, but eventually the trend continues down, okay? So use signals not only when they work, but when they fail, they tell you something. So these are Adeo signals. They work in long configurations as well as short configurations, okay? Here we've got, you can see where they're effective. Here you can see where it isn't, okay? Don't know what it was, but some catalyst moved the market higher, as is evidenced by this gapping. Let's switch to another chart, and what the heck? Well, let's just open something live. Can somebody suggest a chart that we should look at right now? Just type in a symbol. I'll do my best to bring it up. Any Australian dollar, US dollar, SPY, SPX. Okay, I'll take who was first. Dollar sign, AUD, USD. We're going to open it with MetaSwing's standard template, MSW4 daily, and there we go. So this is a daily chart of the Aussie dollar cross, and there we have it. I'm going to make a little adjustment to my my SR line sensitivity, and unfortunately I don't have time to get in specifically right now into what that is, but I'll just make it. And here we are, the Aussie dollar cross. Ooh, this is not looking good for Australia right now. You may see some support right in here along this previous support level. Sometimes they can send ghost support forward, but honestly the slightly longer term target for me, for these folks, is down here around 0.92. Okay, somebody says let's look at a smaller time frame. I understand. Typically FX traders are looking at relatively small time frames. I'm going to switch back up and adjust those lines again, if you'll bear with me 1 second. And I'm going to take this down to 0.1. 0.1. Now let's try 5 minutes. There we go. Okay. There's 5 minutes, and we can see where. Okay, this is a good time to talk to you about another on-screen signal. These are exit signals. Okay, they're derived. They also are directional signals, and they're derived differently from those Adeos I showed you a few moments ago. Okay, that means that if you're currently long, this is probably a good place to exit because you've gotten most of the move out of your move there. You know, if you're looking at a 5-minute chart and trading on that, then a couple hours is probably a long time, or an hour. So it's right. We've got paused in for another 10 bars going forward there. Again, here, and this is another way to sense a trend direction too. Remember I said signal failure tells you something. So I'm going to zoom in a little bit here. And here we can see we have price rising and we get exit signals. Well, the first one's valid. You've got sideways trading for 7 or 8 periods. Then we get another one, and price rises above them. So what we have here is a series of signal failure. We did not get a reversal. Price continues up. I'm starting to think that trend is going to continue on at this point because I've got some pretty significant signal failure here, okay? And, sure enough, it does. That's a good early signal to you that you may have trend change, okay? Confirmed trend change before you actually get other signals of trend change, all right? Elsewhere on the chart, we can see that we have pretty much a downtrend. We have a signal failure here. Price goes up. Here we have signals at work. Here, 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 here. Like I said, 60 to 70% of the time, they'll work for you. Those are pretty good odds if you combine them with support resistance. In this case, momentum. We've got oversold conditions here, 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 as well as here. Start to use the different pieces of analysis, all supported by volatility math. Start to put them together, and you can make a case for a trade. Okay. Let's see. Barry says, does that signal occur at the close of the bar or several candles later? This signal here, this exit signal, is real time. Okay. It will form intra-bar. Okay. Occasionally, you will get a ghost signal on these exits. Okay. About maybe 1 in 20 times, they'll disappear a couple of bars later. That is because we strive to make them real time. Okay, that's the short answer. Unfortunately, I don't have time to give you the long answer, but it happens occasionally. But it gives you valid information while the trade is on. Okay, so yes, it happens in real time, not at bar closing. Now, it is designed to signal a little sooner than the condition, okay? And that is to give you advanced warning, okay? It's designed that way. Obviously doesn't always do it, but it is designed to be a little premature. Here, got a little prematurity. Here, price continues for 1 bar, then keeps going. We try to give you as much advanced warning, and that's why we put it out in real time, okay, if you're a real-time trader, okay. Somebody else want to look at something, TNA, okay. I'm going to switch back to daily. I'll tell you what, I'm just going to close this one. No, and I'll open US:TNA. Okay, small cap bullish. I'll use my template, open, and there we have, okay. This is Direction ETF for small cap bullish 3X. Okay, put some leverage at work here for us, okay. I'm going to turn off the crosshairs, and you can see essentially the direction of trending lately. We've got some exit signals that are very responsive. That's supportive that trend is moving in a downward direction. Okay, and we begin to get trend here below this SR line right here. Yeah, things are not looking great for it. Okay, we get a reversal right here at support with a Deos. Okay, and that's going to bring me to the last part of what I'm going to talk about this morning, or this afternoon, is the 2 mechanical trading systems that were embedded into MetaSwing long about version 4. This is called the version 4 Adeo long system. Okay, we've got one printing right here. I'm going to zoom a bit and give myself some room. Here you see where it says buy. Expert symbol, MSW4, Adeo long buy. Okay, that is a system. It's a quantitatively proven system for long side swing trading. Trying to call bottoms and catch the better part of the swing. In this case, The signal happens at the close of the bar. It's designed for equity trading, end of day equity trading. Okay? So at the close of the bar, you would receive a signal and you would enter at the next day's open. And then generally 5 periods later, you're going to exit at the close. So you got some of that move. Okay? You can try to improve upon it with discretion and say, why don't I wait till it gets into support a little bit more? That's fine. Doesn't always do that. Sometimes it'll leave you right behind. But it's embedded into MetaSwing, and you can also use the Explorer to scan the entire equity market at the end of the day and find those trading signals. Okay. So again, it's a mechanical system. It's quantitatively proven. I am going to show you something here. Bear with me. Here at our website, metaswing.com, you can see, you'll click on this, I believe, you can see the system performance document. Anybody can go to the site and see this. It's a statistical explanation of how we backtest, the best practices that we use. We even do survivorship bias filtering, and how we test this on a statistical basis from a portfolio standpoint, from a signal standpoint, descriptive statistics, distribution analysis, etc. Okay, that is available at our website. And again, all I did was let the thing open, and I clicked on the performance right here, and that took me to that. So anybody can see that. It's got full performance statistics on this particular mechanical system. And also there's one other. It's called the 1-2-3 system. I don't have really time to get into that today, but it's also in that document. Okay, and you can scan for 1-2-3 setups. Just understand that mechanical trading systems are slightly more volatile, and you have to live with that, and trust the system, because generally you're not going to improve much on it. Don't trade one trade. Take 2 or 3. And be more satisfied. You'll be more satisfied with the results of 2 or 3 combination than you will with 1, because it gets to be a little bit of a volatile ride. Okay, it's a quantitative system. Just curious if there were any others signaling here on this. It's primarily a trend following system, by the way. Here was another system, so you would have been able to enter here, exit here. You got a little bit. You didn't get all of it. Again, I'm not doing a great sales job here on anybody. You would have entered here, exited here. I could show you ones that are perfect, and I could show you failures too. You're going to have 1 in 4 fail on you. Here's the other system I was talking about, 1-2-3. You get a signal at the end of the day. You simply enter at this lower support line here, and then trade a small 1 ATR to 1.5 ATR move, and that's a successful 1-2-3. It's really good when you're in a trend, and you're in a trending market, and you just can't get any significant pullbacks. That's great. That's what 1-2-3s are just great for. Okay, we've just hit our 1 hour time limit, so I can tell you that I've shown you pretty much everything that MetaSwing does. It's for essentially shorter term trading, position trading, trend following, those sorts of things. It has a lot of advanced uses. I'm going to stay on for a couple of minutes. If anybody has any other questions I can answer for you, I'll be happy to do that for another 5 or 10 minutes. But I want to let everybody know, if you have time constraints, you've seen the majority of what MetaSwing can do. And there's a free trial out there for you. 30 days, no questions asked. Just give it a shot and see if it works for you. Doesn't look like any other questions are really cropping up. So I'm going to turn this back over to Verl or Dave and let you guys take it from there. And thank you very much for attending this webinar.
Thank you, Kirk. Really appreciate you taking some time. I've put here on the screen just a basic overview of the MetaSwing plugin. and certainly we want to give you a chance to try it out. All of the attendees here within this webinar are going to get an opportunity. You just need to let us know. Go ahead and give us a phone call at the number here, or you can go ahead and order at the web link on the screen. Go ahead and give it a try for 30 days. Like Kirk said, no strings attached. I think you'll find what many other hundreds of MetaStock users have found is that it's a really fantastic system, one that can really add to what you're doing in your trading. We'll go ahead and leave this screen up for you for a few more minutes so that you can go ahead and take down that information. Thank you so much for joining us today.